welcome to our Canton webinar. I'm Josh, co-founder and CEO of The Tie. I'm excited to be joined by Eric, who is co-founder and head of strategic initiatives at Digital Asset, to discuss the launch of the Canton Network. To hear from Eric at The Bridge, which is our flagship institutional conference, you can find out more about that event. It will be hosted on November 6th in New York City at bridge.thetie.io. With that, the information contained in this webinar is for informational purposes only and should not be considered as investment advice. Quick caveat, or before we begin, is there is a chance that there is a fire alarm in Eric's building at some point during this webinar, a real fire alarm, not a business-related alarm. And so our apologies in advance if that happens, but hopefully it will not. With that, let's kind of get started. Let's get into it. So Canton is probably, as Eric and I were joking about before this call, the largest crypto project that you have never heard of or have just started to hear about. And so, Eric, it'd be great if you could give us a little bit of a background on yourself, but also on Canton.
Yeah, thanks a lot, Josh. Thanks for having me, and thanks to everyone who's attending. So just by way of quick background, I started in the crypto space around 2010. I was lucky enough to participate in the Mt. Gox flash crash as my first entry into the Bitcoin space. And a good buddy of mine and I at DRW started Cumberland in 2013. I didn't last very long in that role. I was anxious to build something in the space. And in 2000, of Don Wilson and everybody else at the Cumberland desk, we started Digital Asset with a friend of mine, Yuval Roos, who was in charge of DRW VC at the time. And for the past 10 years, we've been focused on building an L1 for institutional adoption in the crypto space. We've been classically miscategorized as a private blockchain, but we've always tried to refuse the label. We think that there's endless possibility in public networks, and private networks really only tick some short-term boxes, but strategically don't hold water to have long-term effects. And at Digital Asset, we've built a public blockchain we call Canton. Currently has around 3 trillion of RWA TVL and about 2 trillion a month of RWA volume. I think it's a significant multiple of all other networks combined across things like repo, syndicated lending, mortgage origination, physical oil and gas settlements, horse racing, sports wagering, life insurance. I mean, you name it. If there's a real world asset that you believe should be managed on chain in some sort of shape or form, Canton more often than not is the right place for that to take place.
So Digital Asset's been around, to your point, for about 10 years, but Canton just launched. And so could you talk about why Canton, why you guys decided to launch Canton, and what problem does Canton solve exactly that other L1s and other L2s and protocols do not solve?
Yeah, thanks. So another classic misconception, and it's good to have a chance to try to clear it up. Canton's been in production for the better part of the last 6 years, 5 or 6 years. But you can think of us as kind of coming to market backwards. A couple people have explained that to me in the past, and I kind of like that framework, where others have maybe launched a mainnet and now they're thinking about, well, I have scaling problems and I'm trying to think about how to incorporate L2s or subnets or sidechains. We really built all the subnets first, not all of them, but a significant number of them. And what we launched in July is really the mainnet. And the mainnet can serve for 2 primary purposes. It can either be a connectivity zone between those subnets, or it can be your primary infrastructure if you're someone who's a little bit more crypto native and have less regulatory requirements that would force you into more of a subnet style picture. But the number one feature that Canton has that is the major differentiator and the incremental gain on the overall ecosystem is privacy. The reason we're able to get such high RWA TVL is because you're able to manage these assets on Canton privately. And I don't mean anonymously. I think that those words are often conflated with each other. One of our board members, Giancarlo, I really like the way he has framed this. He says, privacy within the context of real world assets or securities is really about describing exactly who must know at all times and who must not know. And in Canton, you have in every single piece of data on the ledger, this fine-grained ability to determine exactly who are the parties involved in that in any shape or form. So privacy is by far the number one differentiator. And this I think sometimes all is over, feels overweight. Like people are like, well, yeah, great, you're doing capital market stuff, but what is the applicability to the crypto ecosystem? And you and I were just both at Token in Singapore this week, and it was a big, crazy event. But what I spent most of my time talking to people about is their interactions with exchanges, the large market makers, right? Every time you're moving collateral or money in and out of the exchange, the whole world knows. And that's extremely leaky about your position, especially if you're talking about a derivatives exchange. If you're short options on the exchange and volatility is up since the last settlement window and you're delivering collateral into the exchange, it's pretty clear that you're up short options. So this is a real concern for major participants in the crypto ecosystem, is just finding ways to be able to move collateral around on chain, safe, secure, 24/7, but without leaking sensitive information about your position to the whole world. So privacy is by far our biggest focus and what we spent the better part of the last 10 years designing.
So one barrier to digital asset adoption broadly has been regulation, right? And we've seen that with SAB 121 in the US. We've seen that with the SEC attacking a large number of different digital asset companies, but we've seen that kind of globally and across the board, right? Banks and asset managers and other institutions really aren't that involved with holding actual tokens or engaging with chains. And so, digital asset has raised money from a large number of these institutions, and a large number of these institutions are choosing to build on digital assets. So can you kind of talk about that and how Canton specifically thinks about regulation and its design?
Yeah, so regulation's actually been a really big tailwind for us. You can configure your subnet in Canton in such a way to meet every single existing regulatory requirement that there is today. And you could meet all of the Basel Type 1 requirements, and you can have an asset that requires no additional considerations in the law, and you can have all your existing balance sheet treatment for the assets. I think the big difference is that when we thought about in the design of the subnets, we gave a greater element of control to the individual operator than you do find in other ecosystems. So again, it's not just who can join my subnet, which is generally the main lever of control you have in other chains, but also once I've joined that, what can I see? And I think that this tends to be confusing for people. So I like to just use a really simple analogy, which is, think about the internet. The internet is one giant collection of subnets, right? Every app is basically its own subnet. But because I have a browser doesn't mean that I get to see everything on every subnet. And even if I join, chase.com, it doesn't mean I get to see everybody's bank account. So Canton extends those same data permissioning controls that you have in Web 2 into Web 3. And so regulation is not something that's ever really hindered our adoption directly. I mean, admittedly, it quells demand for the space in general. And clarity would improve growing the TAM of the ecosystem. But for anybody that is determined within this ecosystem to adopt a public chain, Canton gives people unparalleled levels of control and data permissioning that enable them to get to production today at scale.
And so other networks have taken a variety of approaches towards the use of tokens in their respective ecosystems, and also to the overall governance of decentralized networks. From a regulatory point of view, both these aspects of public blockchain networks are heavily scrutinized because they impact key considerations around who controls the networks, what tie-in there is for institutions and markets to any underlying economics. And so can you talk about how these considerations are baked into Canton Network's governance, the implementation of Canton Coin, and how Canton Coin is being used in the network?
Yeah, so there's no universal governance of the Canton Network. It's very similar to the internet. There's no single body that governs the whole internet. It's kind of like more of a state system, and that's why we went with the name Canton. It's very similar to the Swiss cantons, where each canton has very strong autonomy over their rules, their taxes, how they determine it, and they're loosely federated through the federal government. So we have a unifying protocol in Canton, but each individual subnet or app is responsible for its own governance. So, at a system-wide design, it again mimics very much this internet position or TradFi as it is today. In terms of the coin, we recognized that there are a number of inhibitors to adoption of the coin in TradFi, and you need to make it optional, and you need to be able to incorporate it in stages. And so first and foremost, people can adopt the main chain of Canton without having to directly use Canton Coin. The same way that I would access the internet through an ISP and I would pay them cash on a monthly basis. There are third parties that could face large financial institutions and facilitate their gas bills for them. So I can use the main chain. I can use it in certain ways that allow me to still demonstrate control of my assets, and I don't have to directly interact with the coin at all. And the coin is not part of the protocol. It's an application like anything else. So I can incorporate it and compose it into my workflows where it's additive, where it is useful, where it's beneficial. I could do it for one counterparty or one customer that is willing to use it and not do it for another who can't. So giving people, again, this theme of fine-grained control over how, when, and on what terms they interact with the coin allowed us to make sure that we didn't get a hard no from anybody. It makes it possible for people to experiment with participating and adopt it at their own pace, as opposed to forced on you, right? It's a part of every transaction. It's in the protocol. It's baked into every transfer that you do. We want it instead to kind of you can incorporate it as it makes sense for you, and it provides incentives to do so.
So I was speaking to your team earlier, and one of the problems they were describing for me was the problem within the RWA space of solving for both privacy and interoperability at the same time. So can you kind of talk about what that means a little bit, and can you walk us through how Canton is addressing the interoperability challenge for traditional financial assets and institutional crypto assets, and how this compares to other chains and ecosystems? And I know one thing you guys have been doing is working with the DTCC and other CSDs, for example, on collateral mobility, as well as with newer players in the space, such as Hashnote, to bring USYC to the network.
Yeah, I mean, this is kind of a wonky or nuanced topic, so I'll try to keep it as simple as I can, but force me to be a little bit more specific as you see. I mean, if you want to use a blockchain, you should want the native protocol-enforced interoperability capabilities of it, right? DeFi in the real-world asset space is what I think is so compelling about blockchains. In the internet, we don't have interoperability across apps. We have messaging and reconciliation. So when I need to do a payment associated with a securities movement or for whatever sort of other asset class that might be moving, I'm coordinating two applications trying to update through messaging and reconciliation. And we don't have that problem if we're all on Solana or on the L1 of ETH. We can just compose these things together into atomic transactions with all sorts of protocol guarantees. Really, really powerful, really compelling, really interesting. But the problem is when you start to talk about someone like the DTC or Euroclear or the Fed, if you're talking about central bank digital currencies, the moment you say both of you have to be on the same ledger, now you're talking about shared governance. You have a shared governance problem. Right? Does the DTC partially govern the US dollar now? Does the Fed partially govern securities? How do we determine who's responsible for running the system? How do updates get done? And that governance problem, I think, is really at the heart of why you're going to see that finance is always forced into their own instance of any system, into their own subnet, into their own application, into their own governance protocol. So if you accept these two premises, that interoperability, protocol level, atomic transactional capabilities are what's really novel in this space for RWAs, and that by construction, you're going to be forced into private, independently operated applications, you have to design a protocol that enables both those things. And more often than not, most protocols have envisioned that actually we'll be able to attract everybody into the same L1, and then that's where they'll get that property. And we've started from the assumption that we'll never be able to get everybody into the exact same subnet or into the same main chain, but we need to give them the same interoperability properties. So it was just a design constraint that we set out with that I don't know that anybody else set as a design constraint when they started. But what it ultimately means is that everybody can run their own subnet however they see fit. They can build their app to any design. No standards are required across any subnet. No shared governance, no CCIP, no bridges, no messages. And we have perfect protocol level native interoperability. So I can do DeFi things across two totally independent applications as a common user of both. And that's the vision we've been rowing towards for the past 10 years, is just really capture the benefits of this technology, but in a way that enables the large participants to come in and adopt it, and not trying to force a business level and governance level changes to the way that they do business today. You could even take that to a bigger extreme. Imagine that we had a Euro CBDC and a US CBDC, and they tried to be on the same ledger. Like, does Europe govern the US dollar and the US govern the euro in some way? Like, just the governance problems, I think, are really the big hindrances to everybody being on the exact same instance of a ledger. And that's why you've seen the proliferation of private ledgers, but without native interoperability, I think you're just recreating the same problem that we've had in TradFi for the past 5 or 6 decades. And I just add one other thing, which is Canton to any other system is exactly the same as anything else, right? If you're going, ETH to Solana, or you're going, Solana to Polygon, it's absolutely the same as you would go Canton to any other system. So there's, that's an old problem that there, still really relies on messaging and reconciliation, just under the new terms of bridges and message protocols. But within Canton, we have this differentiated capability of complete sovereignty with interoperability.
So there are so many networks that exist today. There are public permissionless L1s. There are L2 scaling networks. There, as you described earlier, there's a number of these private permissioned options as well, whether that be to run your own private instance of Ethereum, or work with one of the private blockchain providers, or build something in-house. And so you've described to me Canton as being a public permission network. And so what does that mean exactly? And how do you think about the choices and trade-offs people make, and why somebody would choose to build on Canton? Which I think you've already alluded to a little bit, but maybe go into a bit more.
No, I think this is an interesting question too. So I think it's a term that's emerging. I don't know that there's a universal definition for it, but I'll give you some examples in other networks that I think would meet the bar of being called a public permission system. So, think about some of the RWAs that we've seen on mainnet ETH, where you have to be on a whitelist to interact with it. You're in this little mini walled garden within the public ecosystem, right? So all the users of that ecosystem, should they qualify, can have access to that little virtual subnet of an asset on the chain. So if you look at something like a whitelist guarded asset on a mainnet, I would consider that like a public permissioned asset. And we use that term very similarly in Canton, in the sense that the Canton network is totally public. Anybody can join. The majority of the technology that we build is open source, Apache 2. You can run an app doing whatever you want. Users in the network can connect to your app however you determine it. So it's totally public in this regard. But again, similar to my Chase analogy before, not everyone is enabled to go look at the Goldman app in the network and interact with the Goldman assets. Just as I, as a entity on the internet today, don't have access to every application in it. So I think that's kind of the best of both worlds, when specifically through the lens of RWAs, which is you want one ever-growing heterogeneous ecosystem that is public. People can do whatever they see fit. The protocol is not gating who can join, but everyone should on their own terms. So if I'm an app operator, I determine exactly who can access my ecosystem. If I'm a user, I determine exactly what applications I interact with and on what terms. And I think that, again, going back to the granular permissioning, is what we really think of when we say public permission. Just making sure that you control those boundaries within a bigger ecosystem, something bigger than you. And I think that for RWAs, it's almost a necessity. Again, whether it's that whitelist Ethereum variant, or public or a private subnet on Canton, it's almost by construction required, because securities have really strict rules around who can hold them and under what conditions and how they transfer. It doesn't have some of the same nice money transfer rules, travel rules like we have in stable coins, and they're not bearer instruments like cryptocurrencies. They exist within the context of the law that they're originated in. And so you'll have to apply those controls in some way. And whether that's a physical subnet like in Canton or a virtual subnet like in Ethereum, I think that's just going to be the way that this hashes out going forward.
So in the market, there are, it feels like hundreds of L1s and L2s that are emerging, and it feels like every day there's a new chain, there's a new large TGE that's coming to market. Yeah. And so attracting application developers can often be a challenge. And, we've seen historically is protocols funding and paying and giving grants to application developers to go work on their chain. And then after some period of time, they go and they chase another grant on a different chain, or they'll go multi-chain. And so, a lot of times, as I think people think about developing applications on chains, right? There's kind of two approaches, which is, hey, where is there money for me? Or two, where is there users? Yeah. As a chain, which I know you described has been around for six years, but realistically, it's now for the first time public and in mainnet and available for application developers. So how do you convince a developer to go and build on Canton? How do you bootstrap the network? And a network that I would say is different in its structure from a lot of other networks as we've described as well.
I've been in the space long enough that I'm really impressed by all the prior art around tokenomics. I think that's one of the real unsung heroes about the crypto ecosystems are how cleverly people have tried to solve this network cold start problem and how well they've utilized tokenomics to do it. I'm pretty passionate, though, about the market generally having lost its way in this regard. Like they've amped it up almost a little bit too far, where it's truly just about the rewards and it's not about the utility. And so we've pretty carefully architected our tokenomics. Time will tell if it's the right thing to have done. But the way I generally tell this story is, and this is a gross oversimplification, so I apologize to anyone that gets offended by this, but it's just, I try to use this to just make the point that Bitcoin came along and it made a lot of design decisions for a specific purpose. And ETH came along and said, let's make that opcode a little bit more expressive. Let's add some smart contracts. And downstream of ETH, things have generally, again, oversimplification, I apologize to people, but generally competed on the consensus mechanism. But that means that some platforms that have fundamentally different purposes, general application platform, RWA platforms, DeFi platforms, have adopted the tokenomics of Bitcoin, meaning that the rewards go unilaterally to the infrastructure providers, the miners and the validators, which is the right thing to do in a proof of work network where you're trying to create a borderless, censorship-resistant money. But it's not necessarily the right tokenomic structure for application networks where the value of the ecosystem is the utility of the applications. So in Canton, one of the really unique tokenomics factors that we have is that half of all the mining rewards are reserved for applications. And actually only about a third of the mining rewards go to the miners providing infrastructure. We have a different term for it, but just for the sake of the webinar, just assume that they're miners. So in every block, we have 3 tranches of rewards. Something goes to the miners, something goes to the full node operators, because that's a really underappreciated important element of every network, are running full nodes. And then half goes to the application that are driving actual volume on chain. So you can think of this as like a continuous grant system. If your app is active in the ecosystem and increasingly active in the ecosystem, you'll earn increasingly more of the application reward. And I think that's really important because otherwise you kind of just have a mercenary economy where people will hop into your chain early to get the outsized grant to come early, but there's really no longevity to that. Other than maybe a lockup, you don't have any reason to necessarily stick around. You've already made your grant, and the ecosystem does or doesn't work for you. And we find that we try to incentivize all the early participants to continuously participate. I'll sometimes call this activity mining. And so we've really tried to structure the incentives to encourage early participation in the sense that we have a very steep issuance curve like every other chain, but that it is sustained in the sense that The rewards are going to the participants, not just the miners. And in addition, we did a fair decentralized launch. So it's good and it's bad. It's good in the sense that anybody that wants to come participate gets to truly be early and get a disproportionate return from being early, or reward for being early. But it's bad in the sense that every other chain is able to use their pre-sales or their TGEs to go and purchase certain things in the ecosystem to begin with. So it comes with all the trials and tribulations of doing things in a grinder mentality. Just kind of eking out each win by win. But those that come and participate early participate in the tokenomics disproportionately relative to those that come late, and can use their early edge to maintain that advantage over time. So time will tell if that design works well, but the tokenomics is a big one. The second one is just purely the privacy utility. Like the analogy I gave, or the story I gave at the beginning of the call about moving collateral privately. It's just something you can't do on other chains right now. And collateral is moving constantly between market makers and exchanges, or in creation and redemptions for money market funds. So just being able to promise privacy to your holders is also a compelling immediate bit of utility that you can get whether there are lots of users in Canton or not. Right? If I bring my asset there and my holders hold it there, they immediately get the benefits of privacy. And then depending on how they participate in the tokenomics, they can get some additional tokenomic return for being there. So it's we try to make sure that we're providing utility on the outset, and that we have a thoughtful design to encourage people to come and stay and become more active over time.
Can you talk about a few of the initial applications on Canton, but also where you think there's opportunities and applications that you'd like to see building on the chain?
Yeah, I'm really excited about the early apps that we have in the network. I'll highlight a couple examples, two of them, maybe three to start with. So we have a tokenized money market fund in Hashnote that's coming to network. And what I love about Hashnote is that they've designed their money market fund for utility. Right? They're going around and saying, a money market fund you can hold anywhere, and if you're getting the same yield if you hold it in your Interactive Brokers or Robinhood account or on-chain, it's pretty tough to make a compelling argument to do it on-chain. But on-chain, I can move this thing 24/7, and I can post it as collateral on derivatives exchanges. I can use it as settlement. I can use it in bilateral margin management. So they made a lot of conscious design decisions around USYC to make it more amenable to use in collateral. And to a T, every major market maker around the world is seriously considering using that in some margin management process that they facilitate or participate in around the ecosystem. And the big benefit there is privacy. So just being able to do that with privacy is really interesting. So I'm really excited about the money market fund. I'm really excited about the utility we'll be able to demonstrate using that as collateral. We have a company called Braille, who is a really interesting white label stablecoin platform. But I'd say for us, perhaps more importantly, is that as a money transmission business, they're very interested in helping move stablecoins in and out of the ecosystem. So you'll be able to give them a cash or a cash equivalent on a chain that they support. They'll be able to give you your stablecoin on their stablecoin on Canton, and vice versa. So the perennial question, how do I get money in and out of this ecosystem? We have a really strong on and off ramp through Braille. And the third one that I'll highlight is that we have a problem that most other chains don't deal with, which is the asymmetry of information on chain. Right? If you want to say, what's the TVL of USYC on Ethereum? You can go to a block explorer, super simple to figure that out. If you want to say, well, what's the TVL of USYC on Canton? Nobody knows other than the issuer. So there's a new app being built around a data oracle, but rather than it being about data injection onto the ledger for things like DeFi, it's more about data extraction. So, the data oracle can pay the issuer to be an observer to this information. They'll be able to validate that those positions on the ledger are accurate. And then depending on the arrangement between the issuer and the oracle may be able to sell aggregated forms of that information downstream. So we have this little mini economy around data that people have frankly been talking about for a decade in the public chain space, but I think is a little bit contrived because all this information is already public in most of these ecosystems. So here you actually have the asymmetry of the right to see the information that helps you leverage that into a true data economy. So those are some of the things that I think are really interesting. To your question about what do I want to see, I'm really intrigued by what I see as an emerging stablecoin economy. I think that there's really strong product market fit for USD stablecoins around the world, and I think that's pretty obvious how that works. I'm in a country with a less stable currency. I want access to dollars. I want to be able to hold them. I want to be able to spend them. But increasingly, I think there's an opportunity to look at an FX market for harder to access regions. So stablecoins in each local economy versus dollar stablecoins or euro stablecoins, and being able to create on-chain FX markets, or even just be able to extend the dollar's reach into some of those ecosystems in like a diversified bank account. So maybe you hold Philippine pesos, but you also want to hold, maybe you also want to hold a little bit of USYC and have a little bit of exposure to the dollar and dollar yield. Just like new neobank regimes and FX regimes as more and more different stables come together. So I'd love to see that. But the really big one is, again, I think that there's a lot of activity taking place off-chain around bilateral options, derivatives. The perps markets are huge in a lot of ecosystems, but there's also a really big bilateral market. And I'd love to see that stuff start to come on chain on Canton. We can leverage the collateral that's on chain to be able to get into differentiated margin regimes, reduce the expense for participating in these arrangements of trading, doing it privately and securely, guaranteeing the collateral movements. And then that's directly applicable to the TradFi space. So even though we might start with something like a crypto derivatives opportunity, you zoom out, you change the names, but the roles are the same. It's no different than how a prime broker would facilitate commodities derivatives through some of their counterparties. So I'm really interested in the crypto ecosystem, the crypto native use cases that have nearly one-to-one direct applicability to TradFi. Because I think that's how we help coax more TradFi into the space, is we demonstrate this can work. Crypto's at a scale where you can't ignore it. So it can work at a large enough scale that you should seriously consider it. And then looking for those that are a little bit more forward-leaning on how to apply that into their TradFi use cases.
So going back about 10 minutes into this conversation, but we got a question from the audience, which I'm going to pull up here, which is a question around the terminology of public permission blockchain. So from Jerry, he said, I reckon all public blockchains are permissioned, like you mentioned, whitelisted or gated potentially by NFTs. What is unique to Canton in that sense?
Yeah, so again, it's in the architecture. So Canton is a network of networks. It's not a single L1. We have unlimited horizontal scalability because you can stand up N subnets. What's unique about Canton is that we have native protocol level interoperability between all those subnets. And in each subnet, you can configure the validator set however you see fit. So you can have any number of configurations in each of those subnets. We still have native level interoperability. No bridging required. No message protocols required, and we even maintain the privacy through that composability. So let's give a concrete example. Let's say that I have a bond on Goldman, and I want to use that as collateral in our repo product that Broadridge operates. And I am a common customer of both. I can build a single transaction that'll update both subnets in that one atomic update, and it maintains all the privacy relationships of the different assets and workflows. So it's permission in this, like in a very deeper sense, in the sense that I'm not just gating access, but I'm permissioning visibility, I'm controlling validation rules, and I'm configuring all of the data models and everything that I want to my own needs. And then I still haven't sacrificed interoperability. So I think that it's really the depth of it. I used the Ethereum example just to point out that it is actually a fairly prevalent space. As you point out, Jerry, it's not deeply unique to Canton, but the depth of the capability within that subnet is unique.
And so, you talked a lot about RWAs, and if you look at, a lot of the networks today, we're at, probably a few billion in RWA TVL, but if I had to guess, the vast majority or the entirety of that is from crypto native market participants. It's not traditional institutions coming in and interacting with RWAs on chain. Obviously, there's there's some of that, but I think that the vast majority of that is, in some cases, it's incentives. It's like, hey, launch on my chain and I will give you $300 million worth of my US dollar on my balance sheet as an L1 to deploy into, this tokenized money market fund or whatever it is, right, as a way to kind of grow TVL. And so, do you see a lot of demand from traditional institutions? If you do, what are the barriers for adoption, and how are you solving that? And when do they come and when do they interact on chain? I mean, obviously, some of them are already interacting on Canton, as you described earlier.
Yeah, I mean, we have 3 trillion TVL compared to the crypto native ecosystem, but it's a little bit unfair in the sense that, we have the huge markets like repo and syndicated lending, which are just gigantic dollar number ecosystems. But, the heart of your question, I think, is that, unfortunately, I saw a really interesting survey from EY recently, and the overwhelming majority of the participants believe that they are prevented from participating in these ecosystems because of regulation. And there are elements of that are true. I do believe that the regulation is preventing RWAs on most public networks, but it's not preventing participation in Canton. So I think part of the unlock is dropping this like, oh, boo-hoo, we can't figure this out narrative, and saying there are pockets of this ecosystem where it is possible. And changing that to be, instead of just like so binary, you have to change all the rules to make it possible for us to play. Instead, say like, well, who are the participants that have figured out how to make it possible, and talk that up a little bit more. As an example, I spoke to a tokenization platform that is a white label platform under a lot of big TradFi players. And they were telling me that they have around 30 billion of RWA TVL, but people don't count, maybe they've done it on Bezu, or maybe they've done it on, a private blockchain. And I think that also, that sort of, it has to be on a public permissionless network or it doesn't count mentality, I think is hurting the ecosystem. It's actually reducing the TAM. So I'd say being more amenable to the people who have found ways to make it work, learning from that, not dismissing it out of, just out of like philosophical differences, and then helping those participants figure out how they can come and participate. Because remember, these ecosystems tend to be, how many people on this call have gone down the rabbit hole because they started in Bitcoin, right? And that was just the most, that was the easiest place for you to join as an individual. But for an institution, the easiest place to join might be Canton. And you shouldn't, discourage that. You should say, great, here's a step into these ecosystems. And there are very good reasons to use ETH instead of Canton in some cases. And there are very good reasons to use Canton instead of ETH in other cases. And so understanding those trade-offs and understanding why I would use one versus another, I think it starts by first getting involved somewhere. So I really applaud the Franklin Templetons of the world, the Benjis that are trying to get their hands on a lot of stuff. I really applaud, the Biddles, even the JPs and the Onyxes, because it's very, very hard for these institutions to approach these spaces. So if they do it from a place of hands-on knowledge and education, they're much more likely to be able to succeed and push into the next realm. So, it's kind of a lazy answer to say education and awareness. But still, I think that there's a shockingly low amount of understanding about the things that are happening in these ecosystems. And there's just not enough sort of like pattern matching and following those trends, and, learning the lessons learned from those that have gone first.
So you've mentioned twice on this call, 3 trillion in TVL on Canton. And so can you, and you mentioned that's repo. And so can you kind of talk about what exactly that is? Because if you look at, the overall crypto market, I mean, you're talking hundreds of billions in TVL, if not less, across all of the public chains now. So what exactly is that? Who, I don't know what, if anything, you can share, but who is participating and who is providing that TVL?
Yeah, I mean, it's across a pretty diverse ecosystem of asset classes, but it's U.S. Treasury repo, overnight U.S. Treasury repo, bog standard, sort of behavior. When you hold USYC, its yield comes from participating in the overnight repo market. You give them cash, they turn around, they lend the cash, they are given US Treasuries as collateral. The next day they take it off when they earn some interest yield on doing the transaction. So, US Treasury repo is really at the heart of how just about every financial institution on earth manages their balance sheet. And that's a nice chunk of that number. We also have really large use cases around mortgage origination, syndicated lending, again, physical commodity settlement like crude and natural gas. So figuring out how to schedule your delivery of crude and natural gas at certain times. Because we have privacy, we tend to have so much more information on Ledger than just a position. Pretty much everybody else is working with relatively simplistic token definitions, or ERC definitions. I hold this asset, I can move it left to right, or I could lose it. But in Canton, we manage the full life cycle. Trades are on Ledger, settlement instructions are on Ledger, the assets are on Ledger, the settlement process is on Ledger, corporate actions are on Ledger. So it's probably a little bit trickier to calculate TVL than most, but we tried to keep this really just down the center lane and just say, what are the value of the assets that are being used in these settlements across it? But you have a lot of big things coming online. A big life insurance underwriter, horse racing, a really, really large horse racing facility. Just lots of very interesting use cases. But the thing that I'm excited about is when you zoom out and you look at all of these, they're really different subnets and silos. We haven't really even started to connect these things together yet. And that's where I think we're going to get a real inflection point in not just volume, but TVL, because that's where you're seeing the true value prop of the ledger. You're getting immediate benefits of no reconciliation and no settlement errors and all that. So there's a reason to come in the first place as a TradFi institution. But I think the long tail of opportunity is really in the connectivity across these use cases. And a lot of people will say something like, well, what is the common denominator between, I don't know, horse racing and the repo market? And, in that particular instance, I'm not sure that there is one, but there's money moving in both instances at size. And money is going to be a separate system too. So there's a whole ecosystem for cash equivalents, and then the liquidity preferences of the different asset classes. That's when you start to talk about the repo market. That's when you start to talk about, lending markets. So not all these assets are the same. They don't all have the same velocity. They don't all spend the same way. And often markets solve that problem. People express their preference for one asset versus another in these capital markets. So I'm really excited to start to connect these things together. That was the main purpose of the mainnet launch, is to shift the focus of DA and Canton users from solving discrete singular problems and into solving more multi-use case, multi-user problems.
And so Canton uses the programming language DAML, which Digital Asset developed years ago. And so can you talk about why you decided to develop your own programming language, what the benefits are of doing so, how it's evolved over time? And, for a lot of the folks that are listening, or for a lot in the crypto space, DAML might not be a language that they're familiar with for obvious reasons. And so where can they learn more or find resources to help them, learn DAML?
Yeah. So, you're a startup co-founder. Would you rather do more or less as a startup? And it's kind of an unfortunate reality that we had to do so much. For better or worse, we tend to be one of the few companies that are focused on privacy. And so creating DAML was really a necessity. This concept of a protocol that enabled privacy, control, and interoperability. There just weren't the primitives in the other languages to support it. So we tried to create a language that made it easy to build a system like this, or give you the tools to do it powerfully and test it well. But we've always been looking at how to grow the utility and the value of the ecosystem to our users. So actually, I think we'll have an announcement soon, maybe in time for the TIE event. Stay tuned. Maybe it'll be around the TIE event, around us opening up the ecosystem for more ways to write programs for Canton. But it's the two evolve together. They're kind of two sides of the same coin. DAML and Canton DAML is the language for writing applications for this type of protocol, and then the protocol is, obviously for effectuating those apps. So, we kind of had to develop them in lockstep with each other, just given that nothing else quite worked with it. But yeah, I would say that our commitment is to make sure that the tech is providing utility to its users. We try not to be too religious about that. Other than like the privacy element of it, we try not to be too religious about how that gets done. We tend to be quite pragmatic about our approach. And so we're very much looking at how to make that more addressable to a broader ecosystem of languages and capabilities. But if you want to learn more about DAML, you can just go to docs.daml.com and you'll find a whole bunch of tutorials about how
By the
to
way, for anyone listening, DAML is spelled DAML.
Yes, thank you, Josh. You can go to the website. There's lots and lots of educational material. The SDK has a ton of built-in tooling and helps you get off the ground quickly. So it's a new language in the sense that it's a functional language. It's not like some of the others, but we've tried to really invest in making it an approachable space and simplifying your development experience around Canton. But even then, we've taken it even further. So for those that want to use the mainnet, if you are an asset issuer or you're an originator or you have a money market fund or whatever it may be, we've also built a little tokenization utility that runs in the mainnet as a service. So you can issue assets and manage, whitelists and credentials on-chain just by integrating to the APIs of the utility, and you don't have to learn anything about the native smart contracts to begin with. So, again, we've made many investments in trying to make the space as approachable as possible. Ideally, we would have been able to adopt some of the other languages of the other ecosystems. We're working hard to try to be able to do that, but it was mostly out of necessity to begin with.
And so looking ahead, how do you envision the Canton Network evolving to meet the changing needs of the digital asset space, particularly as regulations continue to develop?
Yeah, I mean, like I mentioned before, I think the regulations are as currently constructed are a tailwind for us. But I would like to see people, more than the regulation change, I'd like to see the tone change in a lot of these jurisdictions where it's encouraging people to participate. I think that's why you see like a really big move into Abu Dhabi and other jurisdictions like that, because really the regulators are working with the industry to say, look, I have a responsibility as a regulator. I need to be able to prove XYZ. I need to be able to safeguard against these other issues. Tell me what you're trying to achieve. Let's try to work together. I think that sort of approach of this is a welcoming ecosystem. Let's figure it out together. I'm not out to cut your head off if you want to participate in some way. I think that would be more impactful than any necessary like regulatory change per se. There are a number of issues though that I see plaguing the industry, like capital market stable coins are not very useful because of the way that they're treated on the balance sheet. So there's a number of topics that would definitely benefit from some regulatory improvement. But Canton is really designed where it inherits the design decisions of the application operator. So I don't think we really need to evolve Canton all that much as regs change. Applications that are adopting Canton may take advantage of those regs as they change, and so they may modify what they're doing. But we're a very, very malleable technology stack. And that's what allows us to meet the regs of today, and that's what it will allow any user to meet the regs of tomorrow and take even more advantage of the ecosystem.
And so, finally, people that want to get involved with Canton, whether they want to be developers, users, or anything else, or just learn more about the network, where are the best places that they can go? How can they start building on Canton? How can they get involved?
I think the best place to start would be at Canton.network. It's a site that can direct people into a lot of the different zones of the ecosystem. So it can direct you to DA if you want to talk about how could we help you build something for the network or using the utility. It could direct you to the foundation. So the Canton Network Foundation is something called the Global Synchronizer Foundation. It's a project at Linux. It's supported by the Linux Foundation. So maybe you want to participate in the network through the foundation. You can come in through Linux. So like there's just a lot of different ways you could participate in the network, and Canton.network is probably the best place to find all of that information firsthand. But if all else fails, please reach out to me. What I'm focused on at DA is the Canton Network go-to-market motion for everybody that's involved. So if you know anyone that's using the Canton Network today, anybody that's connected to the Canton Network in some shape or form, everybody knows how to direct you into taking the next step. But if you're not comfortable reaching out to them, please, by all means, reach out to me directly at any time.
And so a couple final things. The first is the TIE has actually published some initial research on Canton. If you go to our website, thetie.io, there's a section called Insights, then under that is Research. And you can read, we're publishing a 5-part research series on the Canton Network. So we published the first of those parts. So I definitely encourage you to check it out and reach out if you have any questions or if you're looking to connect with more people involved with the network. And the second thing is, as one final follow-up, Eric will be speaking at the Bridge. The Bridge is our flagship institutional conference held on November 6th in New York City. We're expecting around 1,000 institutional attendees across banks, asset managers, funds, as well as leading executives from token issuers like Eric. And so to learn more about the Bridge, go to bridge.thetie.io. Eric, thank you so much for your time. And I feel like this is not the last time we'll be doing some of these things together.
Well, you already said where the next one is, so.
Yeah, exactly. So we hope you join us in November.
Yeah, thank you.